Welcome to this bonus edition of the Corporate Couch, recorded at the Heartland Digital Asset Exchange Conference on September 9th, 2025. We had the privilege of being the first podcast to record at the brand new Hive co-working studio in Kansas City. In this special episode, you'll hear insights from 7 distinguished leaders in digital assets and Web3, including former Federal Reserve Bank of Kansas City President Esther George and executives from Coinbase, Stellar Forge, Blockchain Ventures, and more.
Esther, welcome to the Corporate Couch podcast today.
Thank you. It's good to be here with you.
Yeah, very excited. This is a kind of a special edition of the podcast where we're at the Heartland Digital Asset Exchange event here, and we're using the Hive co-working podcast studio. So this is the first time we're the first people to use it. So
great. It looks like great space.
Yeah, very nice, very nice. So the Heartland Digital Asset Exchange, you know, we're the Web3 crypto blockchain world. You, as being the former head of the Kansas City Federal Reserve Board, what attracted you to the event? Because I know you're the keynote speaker this morning.
It's great to be part of this, not because I'm an expert in this space, but because innovation is so key to the U.S. economy, which of course was my area of focus as a regional Fed president and as a policymaker on the Federal Open Market Committee. So anytime you see evidence of innovation, whether it's attacking an existing system or it's laying all new rails, it's worth paying attention to.
Yeah, absolutely, absolutely. And, you know, again, you come from the kind of, we'll say, the traditional monetary system in the U.S. I think the Federal Reserve Board was created in 1913, right. I believe. So what do you think is the hard part for the average American to understand about where this new, finance decentralization is going?
For the average person, and I think this is true of the existing system, Jeff, in many respects.
I agree.
It represents the plumbing of our economy. And so, I found over my 40 years at the Federal Reserve, we don't really want to get into the nuts and bolts of how something works as long as it works. Is it reliable? When I flip that light switch on and I walk into a room, if the lights come on, I don't really think about what's behind there that makes that work. Yeah. When they don't come on, people tend to get more interested in what happened and how do I go about making sure it doesn't happen again. Yeah. So when I think about the existing systems that have been in place for a long time, you think about how digital assets now have come on the horizon. They've been out there a while. But the average person, I think, is still stepping back saying, what will it do? Why would I change from what I'm doing? And how much do I need to understand to realize I'm putting my money to this particular new innovation?
Yeah, and I totally agree with you. We've had Kristen Ragusin, who wrote the book, The End of Scarcity, the New Era of Abundance, and she's been a financial advisor, a long time Merrill Lynch, and now with Raymond James. But it's a beautifully written and beautifully researched book. And again, as we were talking offline, I went to UMKC, University of Missouri in Kansas City for my finance MBA. I was amazed at what I didn't know about money. She talks about in the book, like the Federal Reserve is about as government related as Federal Express, right? Because it's basically run, I think, by the bank, some major banks. But really, money is debt, and debt is money in today's society. And I would love your opinion on that.
Yeah, this is a topic you could go on for a long time because it's really bound up in the history of money, how we think about money, as well as the future of money. And I think today we're at a bit of an intersection on those two things of understanding how is our financial system changing and what is it that drives economic prosperity. So when you mention the Fed, the Fed in its iteration 100 years ago was really a decentralized system. When I hear people talk about today's digital assets and cryptocurrencies as being decentralized, the idea even then was you didn't want to concentrate too much authority in one entity. And so when you fast forward to what technology now allows money to do, how we interact with our money, we no longer have to stand in line to have someone hand us bills of currency. Right. We now can just pull a phone out of our pocket and transact any number of things. And so this space is really evolving and has been for some time. We can get into what does it mean for the average citizen? How do you ensure that those rails are secure, that they have integrity, they won't be compromised in some way? Those, I think, are some of the frontiers that people are working on now.
Esther, I love that take. I would love your thoughts on no one likes change, right? And we're talking about decentralization, so banks and the powers that be, not being eliminated through this, but I mean, it does give more power to the individual. So what are your thoughts on that?
Yeah, it's something that I think a lot of people are thinking about now. Not only the average person that might be thinking about, is this something I want to engage with? But obviously policymakers are thinking about it today. So we just saw Congress pass legislation called the Genius Act. This was a way to put a regulatory frame around this new asset, which is really focused on stable coins. The issue for me, I think, is that you and I want to trust in the value of our money. We had a whole regulatory framework around how we did that with a fiat currency and how the trust in that fiat currency was supposed to come from stability. So now you've introduced a new sort of currency, and I think that story has yet to be written. It is evolving. It is growing rapidly. And the question is, what is the equivalency of trust? Is it trust in the platform as opposed to a central authority that you are looking to say, it's your job to make sure that I have stable money? Is it now going to be something that we can't really touch in the same way? And I think that will be important to the evolution as we look at where this goes relative, as you said, to the average American and how they think about this new way of looking at money.
And I know it's a huge topic, and it's really hard to understand for most people, including myself. Any thoughts on what the average American should be doing to get more knowledgeable in this space and to understand it more?
Yeah, so I think we're beginning to see a lot more attention to this. And any time you begin to develop markets around something, you develop regulation around something, it will begin to garner the attention of people to say, wait a minute, is this something I should be paying attention to? So I think that will be a natural evolution of the introduction of this new technology, of this new way of thinking about money. Importantly with that, though, is for people to understand what is its utility to me. We have something today, and people are looking at this to say, and what is better about this? Is it more efficient for me to use this stable coin than the bank deposit I have? So there are a lot of ways for people to educate themselves, either out of necessity, out of curiosity, or out of saying, this is better than what I had before. And that may vary in all three of those cases.
Yeah, I agree. And any suggestions from you in terms of, one or two books, podcasts, articles that they could refer to kind of learn?
Well, there are many out there right now, and this is the great thing about the internet search around the AI platforms, is your curiosity can be really approached by just putting in there, what is it you want to know? Do you want to know about how the thing is architected? Do you want to know, is it safe? Do you want to know who is managing it and where do I go to learn more? So I don't have a specific recommendation off the top of my head, but I do think this is another example about how technology really can benefit a broad swath of the American consumer to educate themselves on what's happening.
Yeah, and I agree. As with so many things in life and personal growth and professional growth, curiosity is key. Esther, thanks so much for being on the Corporate Couch. It's an honor to have you. I know you spent, 41 years at the Federal Reserve Board of Kansas City. So thank you for doing what you did for not only the Kansas City and regional community, but the national community.
Thank you, Jeff. Good to be here.
You're listening to a bonus edition of the Corporate Couch recorded at the Heartland Digital Asset Exchange Conference in Kansas City. We're bringing you insights from 7 leaders shaping the future of digital assets and Web3. Let's get back to the conversation. Danny, welcome to the podcast today.
Thanks, Jeff. It's great to be here.
Yeah, very excited to talk to you. I have never heard of your company, so I think that's a good start. So talk about Meanwhile and why you're there and what you do.
Yeah, well, that's an issue. That's why we're here, is to make sure more people do hear about us. So I work at a company called Meanwhile. Meanwhile is a fully licensed and regulated life insurance carrier, which is just as boring as it sounds. But the only thing that makes us interesting is that we use Bitcoin as our functional currency. So there are life insurance carriers in the world that operate in all sorts of different kinds of currencies. You could buy life insurance in dollars or euros or pesos or yen. And we're just the first to offer life insurance denominated fully in Bitcoin. So our carrier actually uses Bitcoin as its exclusive currency, from our audited financials, our balance sheet, reserves to assets and liabilities, all denominated in Bitcoin.
So is that both purchasing the life insurance policy with Bitcoin as well as the payout?
That's right. So everything that we do is exclusively in Bitcoin. So our policyholders pay their life insurance premiums in Bitcoin by sending Bitcoin in. Their policy grows in terms of number of Bitcoins in the policy. Whenever they pass away, their death benefit pays out to their beneficiaries in Bitcoin. And then during their life, because it is just normal whole life insurance, they can use the value of their life insurance policy as collateral to borrow against tax-free. So you get the growth potential of Bitcoin inside the vehicle that is whole life insurance, which in most tax jurisdictions around the world is subject to some pretty amazing tax benefits. So that payout of the life insurance policy pays out both capital gains and income tax-free. The growth of the policy itself compounds tax-free. And then those policy loans for liquidity during the lifetime of the insured is also tax-free. Doing it all in Bitcoin, you get the price appreciation of Bitcoin plus the growth of the actual numbers of Bitcoin in the policy as well.
Wow, that sounds amazing. What other advantages to a Bitcoin-based life insurance policy?
So we have really two general profiles of individuals, or two use cases that people are solving for. The first would be for an individual who has some significant portion of their net worth in Bitcoin, who wants to be able to live off of that Bitcoin wealth during their life. I often say that Bitcoin is a great wealth accumulation asset, but you can't live in a Bitcoin and you can't eat a Bitcoin. So you need to off-ramp into dollars to spend in the real world at some point. So rather than selling their Bitcoin and paying capital gains tax on any appreciation, we allow people to put the Bitcoin into a life insurance policy, which they can then borrow against tax-free to pull value out to fund their lives. So if Bitcoin goes from $100,000 to $250,000 to $1 million to $10 million, if you're Michael Saylor, $21 million in 21 years, you could borrow value out against your life insurance policy tax-free to be able to extract some of that value. So that's one use case. People who have Bitcoin wealth that want to live off of it tax efficiently. The second use case is for individuals or family offices who are concerned with estate planning, and they want to pass assets on tax efficiently intergenerationally. Now, if you were to take Bitcoin as a high growth potential asset and put it into something like an irrevocable trust to move it outside of your estate, if you did that, when you pass away, those Bitcoins no longer get a stepped up cost basis because the assets are no longer in the estate of that individual. So what many people are doing is they're moving Bitcoin into an irrevocable trust. They're having the trust buy a life insurance policy and use those Bitcoins to fund the premium payments for that life insurance policy. So when they pass away, the trust receives the payout of the life insurance policy, which is more Bitcoin than what they paid in premiums. So they're passing on more Bitcoin, but crucially, those Bitcoins that pass on as the death benefit of the policy, they're brand new cost basis. So rather than passing on 10 Bitcoin at today's cost basis, you might pass on 15 Bitcoins at a brand new cost basis, which could lead to hundreds of thousands or millions of dollars of tax savings down the road.
Based on this conference that we're attending today, it's amazing to me, like basically about, I will say 99% of the US population has no idea what's going on in the Web3 world and what you're talking about. And what doesn't the average American understand about what you're doing in this space? Talk about that.
What we're solving for may seem like a bit of a niche problem, but what we're solving for really is long-term financial planning. And so I get questions all the time of why would I do this when I can just buy life insurance in dollars, or when I can just make investments or buy Bitcoin outside of something like a structure like life insurance. I think from our perspective, you could buy life insurance in dollars. The only thing that I know for sure as a fact is that those dollars in that life insurance policy will be worth less in the future than they are today. So I talk to people all the time who say, my parents bought what they thought was a lot of life insurance back in the 60s, 70s, 80s. They tragically passed away. And what we've now inherited as part of the payout of those life insurance policies is barely buy a car, let alone like pay off a house or something like that. The purchase power of the dollar has decreased 20% in the last 5 years, 30% in the last 15 years. And so why would you denominate your long-term life planning in a currency that you know is going to decrease in value over time? So the question that I often ask people is, would you rather pass on whenever you die, could be tomorrow or 60 years from now, would you rather pass on 10 Bitcoins or $1 million? I don't know what $1 million will purchase me when I die, but I know that it'll be less than what $1 million purchased me today. And I have pretty strong conviction that 10 Bitcoins will be worth more in hopefully 60 plus years from now, whenever I pass away. And so that's what we're really arming people with, the ability to do long-term planning in a harder asset than the US dollar or some other fiat currency.
Yeah, it's, two questions with that. So what does your average customer look like from an individual perspective, as well as kind of what are the 2 or 3 biggest objections for prospects to join your firm and use Bitcoin-based life insurance?
The general profile really is anyone that has at least 1/4 of 1 Bitcoin. That's our minimum policy size. To buy a policy with us, this first product at least, you have to pay 0.25 Bitcoin total in total premiums. So anyone in the United States or Canada who wants to buy whole life insurance in Bitcoin, if you have 0.25 Bitcoin or more, you can do that. We are expanding geographically and we're designing new products to fit those jurisdictional tax laws. People around the world in different jurisdictions buy life insurance products for different reasons. In the United States and in Europe, it's primarily tax benefit driven, whereas in Asia, as an example, people buy life insurance products more for investment returns than for tax reasons. So we're designing different products for those different jurisdictions. Your question on the hurdles that we face is, I often tell people, I am not a Bitcoin salesman. If you're coming to us, you own 0 Bitcoin, and your first question is, well, why should I want exposure to Bitcoin over the long term? That's the wrong starting point. You should come to us and have a conversation when you've made the decision for yourself and for your family that Bitcoin is something you want exposure to over the long term. I'm not going to go around and try to convince anyone that Bitcoin is something they should own. It's a decision that I've made for myself, and my wife and I have made for our family. Ultimately, the product that we offer in whole life insurance is the most tax advantaged way to have that Bitcoin exposure over the long term.
I have no idea what this answer is, but like right now we're recording here September 9th of 2025. What is 0.25 Bitcoin worth right now, US dollars?
1 Bitcoin's trading at just above $110,000. Okay. So to use round math, between $25,000 and $30,000. Yeah. Those payments get made over 10 years. So you make 1/10 of that payment per year for 10 years. If we're talking about $30,000 or let's just use rounder numbers, $25,000 over 10 years, we're talking about $2,500 a year. But what's critically important to understand is that your obligation is to pay us the number of Bitcoin or the fraction of Bitcoin, not dollars. So if 0.025 Bitcoin is your obligation per year for 10 years, it doesn't matter if Bitcoin's at $100,000 or $1 million or $10,000. Your obligation to us is 0.25 Bitcoin per year for 10 years, because our obligation back to you, the death benefit of your policy, is going to be some number of Bitcoin more than what you pay in. So we don't care about dollars. We don't actually think about the price of Bitcoin. We actually refer to it as the exchange rate of Bitcoin, because to us, Bitcoin truly is a currency.
Yeah, so interesting. Like if you can wave a magic wand and get more people, I know that you're not a Bitcoin salesman, but get more people to understand Bitcoin and Web3 and digital assets, what would you say they should do, or just wave the wand and what would happen?
I think that there's a fundamental misunderstanding of money. And maybe that's an issue just in terms of education, but there's a fundamental misunderstanding of money, and we live in a society that's built on credit. I think that most people don't understand what they own. If they view the US dollar as a store of value, then there really is a misunderstanding. I already gave you the numbers earlier in this conversation, but the US dollar has lost 20% of its purchasing power in the last 5 years alone. So if your store of value is decreasing by 1/5 of its value every 5 years, that's not a very effective store of value. And so that's why people own assets. That's why people deploy capital across an asset allocation or an investment portfolio. And so understanding what your risk tolerance is, I think, is critically important. From our perspective, the long term, if you're taking a long-term approach, Bitcoin is the best asset to hold. It's not the best asset to hold for the short term because it annualizes at like a 50 to 60% volatility. So it could be down significantly over the short-term period. But if you're going to hold it for the long term, we view it as the best asset to hold. And what better financial product than whole life insurance to take a long-term investment horizon? Right. You're marrying an incredibly low time preference asset in Bitcoin with an incredibly low time preference financial vehicle and whole life insurance. So to us, it's a perfect marriage of asset with a tax advantage structure.
Yeah. Like I said, it's so fascinating to me. Danny, thank you so much for coming on the Corporate Couch as part of this Heartland Digital Asset Exchange event. It's been phenomenal. So thank you.
It's a pleasure to be here. Thanks for having me on.
You're listening to a bonus edition of the Corporate Couch recorded at the Heartland Digital Asset Exchange Conference in Kansas City. We're bringing you insights from 7 leaders shaping the future of digital assets and Web3. Let's get back to the conversation. John, welcome to the Corporate Couch podcast today.
Pleasure to be here.
Yeah. We're at the Heartland Digital Asset Exchange event, and it's been fantastic so far. And so you're at Blockchange Ventures, correct?
Correct.
Yeah. Yep. Tell the audience what you're about and what you do to help customers.
Sure. Blockchange Ventures, we started in 2017. We're a seed and Series A venture capital firm. 10 folks in the firm. We're on our 5th fund, early stage in blockchain entrepreneurs. Really, that's where we're investing. And so had a very specific theory, or at least a belief around blockchain as a next generation technology. Our belief is that some of the greatest companies come out of next generation technologies, just like in semiconductors, biotech, networking, and saw an opportunity to invest in kind of this next level of Web3 founders that were going to exploit blockchain to radically change large industries.
Is it safe to say you're basically a VC using blockchain and digital assets to fund these companies?
Well, we still fund in US dollars. We may fund in other currencies, but most of the companies that we're looking at are looking for funding in fiat dollars. And then from there, they're building out new technologies that are on top of blockchain. So some of our early investments were Solana, Polkadot, Scale, Near, Flow, and those. The founding partner of the firm started really early on, kind of fell into the Bitcoin rabbit hole, I think 2012, went to a conference in 2013 and met Vitalik and Gav and ended up writing a check early days for Ethereum, and then just really was enamored with the technology and what it could do. So our earliest stage investments were really on early protocols. And now we've moved to commercial applications is where we focused our time.
Yeah. I've heard a lot of talk, and I'm not an expert in this space at all, but talk about the Genius Act, Project Crypto, the Clarity Act. How are those acts impacting these type of founders that you're looking for to help?
And I think that gets at the heart of what it means to found a company in a certain geo. So when the regulatory environment has clarity and the kind of the venture teams that are looking for great founders can look at a industry and an environment and say, this is a place where we think the founders will have a good opportunity to run downhill, to have the wind at their backs, and the regulatory environment has some amount of continuation from law, you're going to find really great businesses building out. And so if we took a step back and said, where was the U.S. economy and where was the U.S. regulatory environment in 2020, 2021, 2022, it was aggressive. I mean, it was hard for founders to think about building in the U.S. and thinking about, what does it mean for them to be founded and headquartered in the U.S. So you saw a lot of founders leaving and going overseas. With the change in the administration, with the Genius Bill, with Project Crypto, and now with the Clarity Act coming out, that's really lightened up a ton of the headwinds and a lot of the friction that founders would have had to go through in the U.S. to found a company. It's opened up a wide range of great new founders building companies that are on top of blockchain. Now that they just have some confidence that this will be allowed in the U.S.
Is there a certain type of demographic profile of these founders that come to you for capital?
We select and self-select on the basis that, look, we think that most generational technologies go through these three phases. One is that you have a build out of the protocol, and the protocol can come from any walk of life. These can be very established PhDs that have built out a protocol. This could be somebody brand new building out a protocol, or it could be a pseudonym like Satoshi that's built out a protocol. And in that, then the next kind of phase of that industry is usually anointed with some amount of infrastructure and tooling that's like, how do we use the protocol? Your question about the demographics, the things that we see a lot, we get really excited about the commercialization of that technology. So the applications of technology that are going to allow businesses and consumers to use that underlying protocol that only the techies could use. And so for us, we see a lot of established kind of 5, 10, 15-year enterprising executives or folks that just see a problem in a very specific industry and they want to build a company. So we generally are seeing a little older founders, not straight out of college, not straight out of high school. Not to say that we don't fund those too, but we see some established business people that have found blockchain and see a great opportunity to apply it to the industry they know really, really well.
If you could, kind of say, give somebody a magic wand and say, I wish the average founder or even average U.S. citizen would know one thing about, the Web3 space and digital assets, what would that be?
I think the thing to do is to look back and say, when we first all saw the internet, we probably struggled a little bit to understand what it was going to do for us beyond sending an email or sending an image. I think we would have been all a little bit hard-pressed to imagine all of the ways in which the internet has changed our ability to communicate and to socialize and to absorb information. And so the thing that we think about on blockchain is that it's the next rail or just the next step of the internet. On the internet, we can exchange information. And in fact, if you have your cell phone and you have a credit card, you can exchange your location and a little bit of promise to pay to get somebody to come and pick you up and drive you somewhere. On the other side, there's a person that has a car and they have a cell phone and they're like, I'm willing to go get somebody and drive you somewhere. That's the concept of Uber. We all use it, but it would have been hard for us to imagine.
Right.
That thing actually exists. And you can do the same thing with Airbnb and Google and, probably Amazon we could have imagined. But the thing about like the magic wand that you ask about is now how do we transfer value or assets or contracts or ownership and know that it's secure? Today, we do that by handing a piece of paper that's signed to someone else who then goes and puts it in a file cabinet. Then it says it's all protected, secured, and I've checked to make sure that no one else has rights to this. And that's kind of the next layer of what we've built out now. But it took a lot of technology and a lot of cryptography and ways in which we could prove that you have actual ownership. So I think the magic wand piece will come as we all experience kind of this digital money that can just flow back and forth, or digital value.
The VC world in itself is fascinating, but what is it like to be a venture capitalist in this area?
First, I have to tell you, I was a longtime builder. So actually, I started out as an engineer in oil at Chevron. And from there, ended up going to grad school and kind of fell into technology in Silicon Valley. Started a company. We got to IPO that company, then built another company and sold it to IBM. And along the way, raised money from a lot of kind of the renowned Silicon Valley investors. And I'd have to say, it was kind of a mysterious endeavor in terms of working with venture capitalists and trying to understand how do they think about the investment? What are all the other options they have? So being able to come on the other side of the table after spending 20 years building companies, selling companies, buying companies, rebuilding more companies, merging companies, I think that the neat thing is for me, I spend 90% of my time working with the portfolio companies, a little bit of time doing fundraising, and a little bit of time really doing the investment committee work. But the majority is working with portfolio companies. And I'd have to say the thing that's just absolutely amazing is to find young founders that have just this beautiful, like they're first-time founders. So they can be young and they can be older, but they have this passion, they have this vision, they live it and breathe it every day. Hard part is me leaving their office because I want to stay. I want to work with them on product market fit, go to market, and how do we build the company? but it's just seeing that same energy level that, maybe I had 20 years ago, and being able to say, look, I can bring capital to the table. I can bring experience. I can tell you the things that didn't work for me, the areas that I saw other things that didn't work for other people, and I can help guide you on a way to build the company. But you got to do it. You got to hire the right people. You got to bring the right advisors together and find the right first customers.
Yeah. John, thank you so much. I'm honored that you came on the podcast today, and you're just a wealth of knowledge. Thank you.
Thanks a lot, Jeff. Really appreciate it.
You're listening to a bonus edition of the Corporate Couch recorded at the Heartland Digital Asset Exchange Conference in Kansas City. We're bringing you insights from 7 leaders shaping the future of digital assets and Web3. Let's get back to the conversation.
Anthony, welcome to the Corporate Couch podcast today.
Good afternoon. Thanks for having me.
Yeah, I've seen you talk twice at the event so far. I'm fascinated with your knowledge, but you're president of Coinbase Asset Management. Talk about what you do for your customers.
Wonderful. I'm surprised I have any voice left after speaking twice, but people really, really want to know how to handle crypto, how to invest in the asset class. Is it an asset class? How does it fit into their portfolios? That's what we do as an asset management shop. We're an affiliate of Coinbase Global. So we're wholly owned by Coinbase, but we're a separate entity to the exchange and to the institutional prime business. We are our own independent registered advisor. We are a U.S. asset manager and an offshore asset manager under Cayman law. So what we do is we build investment products, and those investment products allow different investor types, typically institutional investors, to get access to the crypto ecosystem in a safe, secure, compliant, registered fund vehicle, right? So what we do is we're managing different strategies, and then they can then invest with us in these strategies, and they have the ability to participate in the crypto economy without maybe having to engage in holding the crypto themselves.
So I'm curious, what is the kind of the demographic of the people that you attract to help?
It's mostly institutional investors, family offices, endowments. Those types of qualified investors are the ones who are generally investing in private market fund vehicles that we offer. The demographic of them is they're typically participating from the alts or the alternative side of their investment portfolio. They're looking at crypto today. They're looking at particularly at Bitcoin, but they also look at other assets in this ecosystem. And the question they're asking is, hey, Anthony, can you help me and my investment team evaluate whether adding Bitcoin to our portfolio allocation is something that we should do? Also, can you help us think through what's the right way to do that? Is just a passive allocation the best way to do it? Or is there something more managed from a volatility perspective? Or maybe they're looking for yield and they're like, let me get exposure to this asset class with a little bit of yield. And so that's what we do. So the demographic is institutional investors who are very knowledgeable across investing across all generally alternative and traditional asset classes. And now they're coming into this space asking the same questions they ask about other asset classes. What's my return? What's my risk? How do I get exposure? Who do I work with? Who are the best parties in that space?
Yeah. I've heard you say 2 different times today in the morning sessions that Web3 is the internet of money. Talk about, I had never heard that term before. So talk about, why you say that.
Yeah, there's a paradigm shift that happens in all of us as we start to think about, if you go back to the internet of data, right, which is where we all live today. In the early 90s, the internet, the global data communication system, was established in the 70s. So it was already 25 to 30 years old by the time the consumer experience really took off. You see some people in the 80s had cell phones and computers. It was mostly institutional and the very wealthy. But the mass consumer didn't yet have access to the real internet at that point. Mid-90s, Internet 1.0, everybody's online. Everyone has the ability to send an email from their email address to anyone else's email address. That data package moves across protocols on a cryptographically secure network from A to B. That was Web 1.0. Then the early 2000s was Web 2.0. And so this is where the mobile data communications ecosystem really exploded. The hardware of mobile phones really exploded. You had satellite connectivity, which really took us off of fiber optic network connectivity. And in Web 2.0, you rapidly expanded the amount of throughput and capacity across those networks for anyone. So now it went from not just 1 billion people, but to 6 billion people can access and send terabytes and terabytes of data back and forth in video form or pictures or anything else. The one thing that did not come with Web 1 or Web 2 was money. So you could have global trading systems that execute quadrillions of dollars of trading per year, execute through exchanges. You can have billions of people sending messages back and forth and also sending payments back and forth. Money always still moves slowly through the banks. What Web3, when we talk about the internet of money, it is an internet, and it is an internet rail that money moves on. So now your money, your data, and your users are all operating on the same layer of infrastructure. And this is where I can send you a digital asset from my wallet to your wallet, and it doesn't have to clear or move through a bank or a correspondent system. There's no intermediary in between me and you in that transaction. And it goes from my wallet to your wallet over those blockchain rails. That's the internet of money.
Yeah, I love that. I don't know if this is an actual stat, but the vast majority of people, let's say 99% of the U.S. population, doesn't understand Web3 and the internet of money. But you talked about, you had a white paper, I believe, Get Off Zero. Talk about that.
Yeah, so in the internet of money, there are different money systems. So money is a network in and of itself. The U.S. dollar is the largest money network. And we all, as U.S. citizens, all operate in that network. And other citizens of other countries choose to opt into operating in that network. Financial institutions operate within that network. There are many other fiat currencies. Every fiat currency is a money network. Now what we have in the internet of money is we need money to move across these rails. And so the first money on the internet of money was Bitcoin. And so Bitcoin is a protocol that was designed to have a fixed amount of supply that will ever be released into the network. And it's a protocol that allows for peer-to-peer permissionless transfer of Bitcoin, or that valuable asset that you and I might agree is valuable. That is the network of money. What's unique about it is that network was initially launched in 2008 by Satoshi Nakamoto with the intention to be a peer-to-peer payments network. So the vision was, how do we create decentralized money that can't be controlled or manipulated by central actors? So, for example, a Federal Reserve. The Federal Reserve today decides, and this is very topical today with the current administration trying to encourage, I'll say, Jerome Powell to reduce rates. We as a country are sitting on one of the highest interest rates of any developed nation today, and it's very expensive from our debt. So we're adding $1 trillion a year in debt. Current administration saying we should be lowering those interest rates. Why is it that the Fed can keep rates so high? The reason is because they control the money, and they do so through the interest rate policy. So Bitcoin is a different money that it doesn't have any central control. When we talk about Get Off Zero, the purpose of that paper is to talk about Bitcoin as an investment in your portfolio. Bitcoin in and of itself is part of this crypto asset class. It is the deepest and largest asset in the crypto asset class, $2.5 trillion by market value asset in that asset. And it is the deepest and broadest, most used digital asset. When we talk about Get Off Zero in that paper, what we're doing is we're saying, if you had added up to a 5% allocation of your portfolio into Bitcoin, it talks about how would that have performed. What you find in the data is extremely well. So Bitcoin, being a fixed supply new money, has performed. It's actually been one of the best performing assets in the history of the world of any assets you could have held. It has completely beat every other asset class, equities, commodities, beat fixed income for sure. It's beat infrastructure, private credit. The return of Bitcoin over that period of time for the last 10 years was about 86% annualized compound. And if you go back to the beginning of it, it's been over 100. So phenomenal return because it's a fixed supply monetary asset, and the adoption is growing today. When you think about the typical 60-40 portfolio, most investors actually still have a lot of the very similar 60-40 characteristics, 60% equities, 40% bonds. Some investors, especially institutions, have started to diversify a little bit away from bonds and a little bit away from equities into alternatives like hedge funds and private markets, and they've taken on duration risk in the private markets, and they've taken on different kinds of yield risk in direct lending and infrastructure. Got some real rates hedge or exposure in there as well. Real estate's always been a big one that the market's really adopted as a great asset that offsets monetary inflation. But there's actually really nothing, except for maybe gold as being the other purest form of expression of how do I offset this new risk factor called monetary debasement. And that new risk factor is a real thing. It's alive and well. We all experienced it during COVID when they came in and printed 40% of all the US dollars ever to be in existence came in that 1 year alone. And at that point, everybody, at least in America, and it was a global phenomenon too, we experienced the largest inflation shock that we had seen since the 1970s. And it was a real monetary inflation shock. It wasn't oil, the supply chains, right? It was a monetary inflation shock. Everything went up in price, from your food to your real estate to your energy costs. Because everyone had that experience at that time and Bitcoin had phenomenal performance, the market really started to understand, hey, this is actually a really interesting asset for me to hold, because the properties of it being a fixed supply money allow it to respond. It has really strong convexity to an increasing money supply. Right? So on a relative basis, you have one currency, another currency. If you print a lot of one currency, the other currency is going to go up in value. It's a long way to say, in the paper, we're advocating for selling some of your fixed income portfolio, which doesn't do a great job in hedging your real rates, your real risk, and keeping your equities intact and adding Bitcoin. And the Bitcoin will give you that monetary debasement protection.
Yeah. And I've heard through the course of the morning sessions that, there's a lot of volatility in the space with crypto. But, what is the investment horizon of that 5% of your portfolio? Is it, 5+ years, 10+ years? What?
I don't think that there is a horizon on it, really. Really, you have to think about the design of the protocol. And so the protocol is designed to continue to cut in half its emissions every 4 years from now until the year 21. So if more and more of the world, so if now it's probably 200 million users are holding and transacting with Bitcoin, it's being institutionalized in many ways. You've got ETFs, you've got options, you've got futures, you've got now funds like ours that are integrating Bitcoin into yield strategies. The institutional adoption and the retail adoption is happening in real time. You have the federal government looking at creating a strategic Bitcoin reserve. They acknowledge the properties of Bitcoin are to create sound money, and that sound money should be backing the US dollar. You've got state strategic Bitcoin reserve bills across 26 states right now that are being evaluated. Texas was passed. You've got global governments around the world all using and acquiring Bitcoin next to gold as a store of value. So the broad consensus at the consumer level and at the geopolitical level, solid store of value asset that I want to keep in my portfolio and hold in there because it's going to help me offset monetary debasement. Monetary debasement affects every part of your asset. Actually, the reason equities and real estate and everything else goes up in price. There's a little bit of an equity premium in there. There's a little bit of supply demand in there, and there's a lot of monetary debasement. You can actually go in and extract the DXY, the dollar index, which compares the US dollar to a basket of top 10 other currencies, the euro and others, down 10% this year, okay, versus the basket. Versus individual currencies, it's down, versus the Swiss franc, it's down 5%. On a relative basis, all these currencies kind of move in lockstep with some degree of correlation. And but versus Bitcoin has blown them out of the water. And what it looks like is Bitcoin's going up because you're sitting at the vantage point of holding the fiat, and you're going, wow, that thing is moving up and down. Well, what's actually happening is your currency is being devalued over time. And so you're experiencing that kind of sinking feeling of the price of Bitcoin going higher. And that's the same feeling that people have when they see real estate going higher and they don't own any. Right? They say, wow, man, I really, especially our young population, I really wish I could buy a house, but they're all $600,000 now.
Right.
Medium home price. Well, guess what? The median home price is now about 5 Bitcoin. 10 years ago, it was 5,000 Bitcoin. 5 years before that, it was, millions of Bitcoin. So this is the property that when we talk about the Internet of Money, the store value nature of Bitcoin, why it's important, applies to gold to some degree too. Gold is a very similar asset in that we hold it, we store it. We don't really use it to transact very much. It's not a great medium of exchange, but its property has been for thousands of years that we have as individuals and as countries and nation states denominated a store of value that can withstand the devaluation and the collapse of currencies for thousands of years. And we expect Bitcoin to be that, but a digital format of that.
If you could tell the average American citizen if they can take one action to get better educated in this, Web3 Internet of Money space, what would that be?
Start using it. So an easy way to start using the Internet of Money without taking on any directional risk is just using stablecoins, right? Is opening a crypto wallet with Coinbase, for example, moving dollars in, holding stablecoins, which is your digital dollar, sending stablecoins to your family or loved ones for Christmas. Use the technology in the same way you did when you logged onto the internet for the first time in the first internet, and you started to browse the whole World Wide Web. This is the World Wide Web of money. It's just the same internet, and you're going to see new applications built that integrate this Internet of Money that will offer you services and stuff like that. And so I think just using it would be the first point. The second point is get off zero. I think from the perspective of the investor, this is a monetary regime shift that's very important. It's happening whether you like it or not. And you're either going to participate in offsetting the risk of monetary debasement or you're going to be affected by it. And so we think at least having a little bit of exposure is enough for you to feel comfortable going, if I put 1% in, then what's the worst that can happen to my overall livelihood? Probably not much, but it could be very good in the event of a continuation of fiat currency.
Yeah, for those of us that are around in Web 1.0, just we can apply that to the Web 3 world by just remembering that first couple times we got an email and how excited we were, and we wanted to reply right away. So I think getting involved, like you said, is the first step. Anthony, thanks so much for being on the podcast today.
Great to be here. Thank you for having me.
You're listening to a bonus edition of the Corporate Couch recorded at the Heartland Digital Asset Exchange Conference in Kansas City. We're bringing you insights from 7 leaders shaping the future of digital assets and Web3. Let's get back to the conversation.
Michael, welcome to the Corporate Couch podcast.
Hey, thank you for having me.
Yeah, you're the only one I have met prior to this. So we met back in COVID days, 2021. So, but it was via Zoom. So it's nice to meet you in person.
Wow.
Yeah.
Meet you in person.
Yeah. So we're at the Heartland Digital Asset Exchange event, and your company, Stellar Forge, is one of the sponsors. So why don't you talk about your company or companies under that Stellar Forge brand?
Yeah, absolutely. So we are a data center and infrastructure business. We provide hosting services to retail markets, to enterprise markets, and then we are in both the Bitcoin mining and AI space now. So anyone that's looking to get into Bitcoin mining, whether they're institutions or retail, we have the opportunities and the facilities
to help educate me and probably a lot of the listeners. Talk about Bitcoin mining, what that is.
So many folks are getting into Bitcoin. You hear it pretty much everywhere. There are different ways to participate in the ecosystem. Essentially, you can either buy on the exchange or you can take advantage of investment opportunities, which is what Bitcoin mining is. So, for example, many folks come to us, maybe it's their first time, they're learning about blockchain. They want to be able to take advantage of recurring revenue or passive income. So a lot of times folks are either looking for a rental property to invest in or something like that. This gives you a passive income stream without you having to actually go through all the hard work of putting together the rental property, going out and getting the loan, all those types of things. You can take smaller amounts of capital, deploy those amounts of capital via machine purchases. And then once those machines are purchased, they go online in our facilities. We take care of all of their maintenance and service that's needed, plus the electrical to get them online. And then essentially by participating in the Bitcoin network, you receive rewards every month, which is enough to cover your electrical plus create passive income. So for folks that aren't looking at wanting to deploy or put down $40,000 or $60,000 on a new apartment unit, they can say, hey, I only want to deploy $10,000 or $20,000, and they're making a similar income that they would make off an apartment unit, but through Bitcoin mining. So we have a lot of folks come out of real estate market that are interested in this once they figure it out, right, or other people that are actually have extra money and they're looking for an opportunity to be able to invest in something that is up and coming and becoming more adopted.
Yeah, I know one of the speakers this morning was Grant Cardone, and he obviously buys a lot of 346 high luxury condo units in, I think it was Boca Raton, but is it similar to what he's doing? I mean, obviously you're not buying the property like he is, but is there any similarities there?
They are similar from the fact that they involve Bitcoin. The biggest difference is from an income strategy, from my understanding, is that they're utilizing Bitcoin and purchasing Bitcoin from the income that they make off the property. And then that actual Bitcoin then becomes part of their reserve strategy for longer term. It's different from investing in a REIT right now. In a REIT, you're not able to do the same type of investment, but with the actual apartment units, you can participate in the Bitcoin ecosystem as a store of value. So if you're looking at your value of property going up at the same time, also as the Bitcoin reserve that's there, from my understanding.
Right.
Grant could correct me.
I know you have kind of 3 different kind of legs of Stellar Forge. So what's the difference, what are the customer profiles of Stellar Forge compute, mining, and capital?
Everything really starts with the capital side. Capital, essentially, we're creating SPVs, special purpose vehicles, from an investment perspective, which means essentially we identify an investment, which typically involves land, power, and an end customer. And then what we end up doing is we package that up in an investment vehicle, which means we have a pro forma for that particular type of deal. So if somebody says, I have a certain amount of capital to allocate, they always want to see the pro forma on a deal to see what are my type of returns going to be. So once we have all of those particular numbers, we end up putting them into that pro forma. The investors review those, and then essentially they would sign a PPM, a personal placement memorandum. And so what that does is it identifies investors that are accredited, which means they have a certain net worth assigned to their name. And then once they sign the PPM, it puts them through a memorandum of understanding of what the deal looks like, take that capital. We then fund that deal, and then we begin allocating capital toward the project, which typically starts with construction, regardless of which side we go on. So since we are an infrastructure business, Stellar Forge Mining is a Bitcoin mining infrastructure side, which is different types of infrastructure than the artificial intelligence side. When we are deploying capital, deal sizes look bigger on the artificial intelligence side than they do on the Bitcoin mining side. Bitcoin mining is a little bit more economic from the infrastructure play, meaning that the assets that are required to create performance or to go live with a particular investment and customers is actually cheaper to purchase and to set up than AI. AI has a lot of additional constraints that are very different than Bitcoin. So for example, like redundant power, redundant generation, additional types of platforms or concrete scenarios that have to be accounted for, different types of coolant, stuff like that. Whereas in Bitcoin mining, we can do with less and still make very good returns for investors.
You know, the average U.S. citizen probably knows a little bit more about AI than kind of the Web3 digital asset world. Like, why is it hard for people to understand the space of Web3?
I think essentially we sort of bundle multiple different things within the same thing. And that's what creates issues or misunderstandings. It is almost like talking about software for a particular industry and then saying it's the same as software for another industry and then applying it toward another one. And then you're like, on this one, we're dealing with food supply chain. On this one, we're dealing with gold. On this one, we're dealing with something else. So the complexity of our world is that we are taking physical objects that have a certain duration with certain characteristics, and we're trying to package them with technology. And so every time you do that, it's difficult. And using similar naming conventions for everything is what's made it even harder. You know, another aspect I would probably say too is that understanding of money in the monetary system is something that is of utmost educational value when it comes to looking at future transfer of wealth, because we live in monetary systems that out of good faith are manipulated daily, are changed and have different regulations and different, I would say, almost like if you go to the bowling alley, if you don't want to go into the gutter, they put up, what do they call those?
The rails
the rails on the
bumpers,
side,
the bumpers.
Right? So the ball stays on the lane.
Yeah. I use them all the time,
you know?
actually.
Yeah, me too, sometimes when I can. I think that's the whole thing when it comes down to looking at the different parts of technology. One is completely monetary. Another one is facilitating transactions or facilitating process. And so when we think of those things in our world, those are somewhat intangible. We just assign a random value to them and try to figure out how they sort of adapt or fit.
Right.
So it's very complex. I think sometimes folks that run monetary theory and also run the monetary system still are trying to encapsulate their mind around all of the different forces that are going on in the world that are impacting us, whether it's geopolitical, it could be monetary, economic, obviously. It's like grammar after the fact. Right. It's not like you had grammar first and then you knew how a word went.
Right.
You learn the word first or the sentence and then you're like, tell me how the grammar goes. Right.
Yeah.
So sort of like that.
That ain't easy.
No,
sorry,
it's not.
Mrs. McLaughlin, my English teacher. So, Michael, you're an early adopter in this space. You're probably in the 1% to 2% of the U.S. population that knows, this space. So, what attracted you to it?
I think the more that I was learning about physical assets, the more I was learning about nominal value that we assign to things as numbers. And then also, I think during COVID, and even prior to COVID, there was a very big sort of genesis or rebirth. I wouldn't say genesis because genesis is starting place. It's sort of a rebirth in people to where they started thinking more about finance. It was like 2019 when folks really were thinking about what was going on. And at that time, we were starting to see the economy, people were getting laid off, numbers were not as great. So you started looking at what assets do you have and how can you generate new opportunities for yourself? Then you meet a whole bunch of other people that also do it, but you don't meet them through traditional communities. You meet them like online. Like if somebody is into crocheting, they find a group online and they all talk through WhatsApp, right? They share pictures of whatever. If they're into painting, they share their pictures. It's very similar to that, how it happened for me. And then you get into it and you're like, wow, you're learning with other people. They're teaching you things. You're teaching them things. And then you start to realize that as a human species, we are looking for preservation of value in our life. You work real hard. You want to make sure that whatever you work for stays with you. You don't want to have to work for it again tomorrow and be like, man, now I've got to spend double the amount of money on that gallon of milk. It changed from day to day. So I think for most folks, that at least within communities I was in was how it started. And that's how it started for me. And I realized that Bitcoin is a store of value that interacts in opposition or in the opposite direction of inflation. So as you begin to inflate away the value, the opposing force pushes the value of Bitcoin up. And in a inflationary system, as fiat is, meaning the dollar or any type of currency, whether it's a rupee or whatever, based on monetary controls, most of the time monetary policies to print, which means inflating things. Bitcoin has a fixed quantity. A lot of it has been lost. We're finding that out every day. So there's even fewer Bitcoin than there were before. So it gives you different intangible qualities that can sort of support your future. And from the pricing perspective, I think one thing people forget is you always think that something is fixed because we peg it always to the dollar. So we're like, if a stock is $200 or something, you think that nominal value is always staying consistent because you're not seeing the dollar fluctuation in the background. So just what we're seeing with Bitcoin at the same time is very similar to that. So if people see a little bit of a change in Bitcoin, it's because you're seeing it. It's visible change. I like transparency.
Yeah,
I prefer that. Everybody has a different reason, but most of it's wealth preservation or thinking about taking something from one place and being able to take it to another. You can't take your house one place and take it to another. It's also very liquid. You could be like, hey, would you send me this? And I could be like, okay, let me cash out this Bitcoin real quick and I'll Venmo you the money, or I'll do something else in fiat. You can't do that with a house. Right. You got to be like, I got to sell this thing.
Well, yeah. Michael, I live in an RV, so I can do that. But anyhow.
Yeah. Well, that's
a joke.
Yeah.
Michael, thank you so much for coming on the Corporate Couch today.
Absolutely.
Yeah, it's been an honor. Thank you.
Yeah, thank you.
You're listening to a bonus edition of the Corporate Couch recorded at the Heartland Digital Asset Exchange conference in Kansas City. We're bringing you insights from 7 leaders shaping the future of digital assets and Web3. Let's get back to the conversation. Gary, welcome to the Corporate Couch podcast this morning.
Thank you. Thank you very much. Good to be here.
I'm just so honored to meet you. You're fantastic person, both in your business ventures, but more importantly as a person. Follow you a little bit on your socials, but we're here talking with various digital asset Web3 thought leaders, and you're one of them. But what got you into this space, Gary?
I started my career, economics background. I started my career in energy, spent 25 years in energy. Took 6 or 7 years off, studied religions and history, then built a business in fintech called Chargebacks 911 as a fraud solution for the credit card industry. That I looked at the credit card industry in 2005 and noticed that it was built for you and I being direct with each other in a store. I give you my credit card, I give you my license, and we're good to go. But that's not really the way business works anymore. A lot of it's online, and there's a massive issue online with people saying, hey, I didn't get my product. 700 million disputes a year on credit card payments in the United States. And then I started looking at crypto. And the problem I had was I built 6 or 7 businesses. And over the decades, I've noticed it's becoming more and more difficult to get to EBITDA. It's been more and more difficult to manage people. It's been more and more difficult to manage legal issues, HR issues. You know, the gradient for running a business seems like it's getting steeper and steeper, and the returns are getting less and less. And the time to market for full liquidity for business operators like myself is extending. I look back over my career and I'm like, okay, the only issue I've ever had in my career is human error. That is risk that I cannot control because of human error. It could be a board, it could be an external event that I don't control. It could be a war event. It could be what happened yesterday with Charlie Kirk. And the more I looked at Bitcoin, and I'm a very interesting person. I like interesting industries. And I was like, hey, I think this solves the problem. I bought a bunch of gold and a bunch of silver. And at the same time, I bought some Bitcoin. Not a lot, because it seemed too immature and too circusy.
What year was that, Gary, when you bought it?
This would be 2016, and then 2018. I turned my head away from it in 2016 because of Roger Ver and the children. There was an argument going on. The Bitcoin community is quite immature. Let's be honest, okay? It's a new industry. It's 15 years old. NVIDIA is 26, and Microsoft is 35. Bitcoin is a child, okay? And that's what really interested me, because I knew that it was 12 years old. I'm like, okay, this is old enough now to start maturing. And in 2020, I went in really, really, really heavy. I started buying a lot of Bitcoin. I bought a company called Node 40 in the space. I think of this as an industry, not as a token. I think of this as an industry, not as a currency. I think of Bitcoin as an industry. It's going to employ millions of people, and it's a global product. It has nothing to do with just the United States. This is very, very cool. Okay, I have never been able to invest in a monopoly that had no board, that had no leader, had no address for the DOJ to send an antitrust letter to. And I have ownership as much as I want to buy into I believe, a monopoly. That's something that cannot be disrupted at this point. It has 16 years of adoption, 400 million users that market and promote this product. This is like owning a franchise for $100,000. And I can buy as many franchises as I want. 100 grand a pop, 100 grand a pop. Popeye's fried chicken cost me $3 million. And I have to go to work. And I have to make sure the windows aren't broken. And I have to make sure that the 82 IQ people that I hire don't spit on me and kill the customers. And then I have to make sure that the food's not poisoned. And then I have to make sure that I have flood insurance and burglary insurance. And I've got to send Popeye's fried chicken money no matter what happens. And I'm stuck on that fucking trade for 10 years. I can get in and out of Bitcoin. 4 years, no human being has ever lost money on Bitcoin. Ooh, that's interesting. Fact. If you hold Bitcoin for 4 years, you'll make a 25 to 50% return. There has never been a loser. Now, that could change, but I'm not going to bet against it. It's 16, and it's been attacked by everything, man. It has been attacked by China. It has been attacked by Biden. It's been attacked by Warren. It's been attacked by the SEC, the FTC, the FBI. I mean, dude, it's been attacked by everything, and it keeps getting stronger. And if you just zoom out and look at a 12-year chart, I just throw the first 4 years out and go, who cares? It was too young. Last 12 years, this is a beautiful chart.
Right.
This chart looks very similar to NVIDIA, except that it doesn't have another 12 years. It's a baby. No $2 trillion industry has ever failed. That is fascinating. That tells me this is the time that the family offices will move into Bitcoin in a massive way. because they know, $2 trillion industries don't fail.
You talk a lot about Bitcoin. I think you would be a Bitcoin maximalist or maxi, as they call it. Why so heavy on Bitcoin versus other alternative cryptocurrency?
Why would I want to?
Well, you're so heavy, you're so pro Bitcoin, but there's obviously other options out there.
Well, I don't think there are other options. I think you're comparing frozen yogurt to real ice cream. Do you really like the frozen yogurt ice cream, or do you do it?
I'm a big ice cream fan. Tell you, I'll go right there.
Exactly. Okay. If you want to invest in a Volkswagen, awesome. If you want to invest in a Bentley, it's Bitcoin. Look, these other things, there is no cap supply on these other things. These other things are packaged up to look like Bitcoin, but their own 40% is owned by 5 guys, and it's a monopoly. Really? And by the way, some of the most powerful people in the world own this product. That's why I continue to say, oh, wow. Because a lot of your people are going to go, wow, this thing's moved from 0 to 100 grand. Yeah, it's safe now. It was not safe back then. If people want to buy Solana, if they want to buy XRP, if they want to, they can. Don't know why you would if you don't understand the difference between the products. They're significantly different. And then you start looking at, well, if you're going to buy that, why wouldn't you just buy gold? Or why wouldn't you buy a Bitcoin miner? Or why wouldn't you buy an AI platform? I know our future is changing radically. We are going to digitize everything to the extent we can. We have no Switzerland anymore. And I think it's safe to say that having a Switzerland has proven to be good. In a world of chaos, to have a neutral currency that no country controls, as we are now moving into a poly-global marketplace that competes with each other, will be essential, because the US dollar is not going to be the first go-to product that China wants to use, much less to settle their treasuries. They're going to sit there and go, I don't want to be attached to the US dollar, dude. They're killing me.
Right.
Bitcoin's 2 trillion. The next one, Solana, is 600 billion. $600 billion reserve does not get into any state, country, or county to go into their treasury. It's too small.
Yeah, it's so interesting. We've talked about it before we went live. The average U.S. citizen doesn't really understand the space. And, we talk, they probably don't understand the existing monetary system in the U.S. But what advice would you have for the kind of the average U.S. citizen in terms of, starting in this space?
Well, I think, look, there's a great book you could read. There's a couple of great books. My view, I've never seen anyone that would watch a video, it's about 25 minutes long, and read 2 books, The Price of Tomorrow and The Big Print by Lawrence Leopard. The Cost of Tomorrow is by Jeff Booth. I would read that first. 25 hours of research, reading these 2 books and YouTube. I've never seen a human being not invest in Bitcoin. Never, not one time. Yeah. 25 hours. I have never met anybody that poo-pooed on Bitcoin that has ever done the 25 hours. Now, isn't that interesting? So you get the naysayers talking about volatility, but they haven't done the research.
Right.
Because if they did speak of the volatility, they would speak of the return, 45% a year.
Right.
You can't say, hey, it's really volatile, and then leave out, oh, by the way, it always wins the race. Right. My car is really loud, but I don't tell you, hey, it wins the race, dude, every time.
Right.
So, and then I would stick my head into some of these, like there's some really good, like people could follow me on Spaces and they're going to meet every major player. Like I have multi-billionaires coming into these spaces, and we're talking about commerce and global finance and what is oil doing? Does electricity impact AI? Does AI impact Bitcoin? The amount of rich education material here is staggering. So that's, to me, it's a very easy approach now. You're probably not going to get this information from your financial advisor.
Yeah.
Okay, you want to stick your nose into another. You're going to find you're probably not going to need many of these advisors anymore.
Right. Interesting. What video were you referring to? I don't think you mentioned it.
It's the white paper, the Satoshi's white paper on YouTube.
Okay. Yep.
The Satoshi white paper. Go in there, Bitcoin white paper, YouTube, and you can literally watch. And that's a good thing. There's going to be a piece of this stuff that most people don't understand in the middle. just stay high level on what the construct of Bitcoin is. And just because it's called a white paper does not mean it's scientific. It just means that it's a thesis. Okay, it's a thesis. Most people have not read the white paper. Most big investors are not reading the white paper. I will tell you, we're seeing a very different trend than we saw 3 years ago from families. And that trend is what I predicted, which is when they're going to study this a long time. And then when they come in, it's going to be well above 1%. We thought Bitcoin would be, 2 years ago, we would argue that allocations would be 1%. The allocations are 3, 8, 12, 15%. Once people start studying this, they're like, oh my God. To me, this is a really cool opportunity for anybody from 30 to 70. They have an opportunity here to invest in the future, and it's caught Wall Street really off guard. Wall Street has fought this. They have not supported it, and there is no one on Wall Street fighting this anymore.
Right.
This is a career killer now if you fight this. The data is there. I mean, it's staggering data.
Yeah. Gary, I want to thank you for coming on the podcast. Your insight's incredible, and it was an honor to meet you. So thank you for coming on today.
Happy to help you anytime, man. Thank you so much.
Well, Heidi, I usually do these takes on the episode with Joe Deschamps, but you're much more intelligent and better looking than Joe. So welcome to the first outro that my partner in crime, Joe Deschamps, is not doing. So thanks.
That's a great way to start a Monday, and I must be having a good hair day. So
there you go.
Thanks for the compliment.
Yes, my outro partner today is Heidi Lehman. She does a lot of different things, but she is the founder of the Heartland Digital Asset Exchange, and we had this podcast was most of it was recorded live at the Hive Co-working event center or co-working center.
I'm still there today.
Talk about the event on September 9th, 2025 that we were at, and it was phenomenal. But how did that all come into being?
You know, I'd been interested in digital assets and blockchain, as you know, because we covered this in a podcast that we recorded earlier, probably for the past year. And it was looking at it more from a blockchain integration perspective. So I was seeing blockchain incorporated into energy deals like carbon credits, supply chain transparency for food, to help truckers get paid faster using a form of tokenized private credit. So, I'd been involved in that side of it. But then another role that I have, and as you said, I seem to have many these days, is a chair of Tiger 21. And Tiger 21 is an elite peer advisory group that caters to exceptional wealth creators. So either entrepreneurs that have exited, or those that are second or third generation within a family office, or ultra successful investors, with one of the common threads that ties them together is they have at least $20 million of net worth, with an average of about 100 million. And there was a stat that came to my attention, which was that group, Tiger 21, and it's relatively small. It's global, but there's only 1,600 members, but they seem to have put a lot of investment into digital assets, about $6 billion. So there was a good fluency there, and clearly some kind of an understanding enough in Bitcoin and perhaps other digital assets as well, that they were making investments. But my experience being a chair in the Heartland or the Kansas City market was that, perhaps that fluency wasn't as pronounced. Like, I didn't see that investment happening here. And I think a lot of the reason was just there wasn't education, there wasn't understanding. So you kind of have to understand an asset class before you're going to invest in it. Then on the other hand, I'd also seen a lot of opportunities, again, these infrastructure opportunities that were germane to Kansas City. They were based here, and a lot of them were either tokenizing invoices or raising capital using blockchain or digital assets. So it just felt like there was this real opportunity both to educate the investors, so just generally they could look at their own portfolio and have the same fluency as those on the coast or globally, but also take a leadership role in some of these infrastructure projects at that intersection of energy, supply chain, manufacturing, and digital assets. So that was kind of the genesis of the event.
I think you posted recently in LinkedIn about the event was like blockchain meets Wall Street in the heartland. I love that description. I was able to attend a lot of the sessions in between interviewing 5 or 6 of the guests or panelists and speakers. And what was your take? This is a first-time event, but what was your overall take of the event and the reception to it? And did you find it successful?
I mean, I feel you when you're in the middle of running an event, you're never sure. You get a sense of how it's going, but I have to go back and listen to a lot of the panels because I didn't get to listen to as closely as I would have liked. But I think, what struck me the most was just the emphasis that was put on relationships that perhaps couldn't have been forged any other place or at any other time. It's not often you've got large global companies, and in the digital asset space in our world here, that was Coinbase, Deloitte, and Fidelity that came to the middle of the country to participate in a summit like this. And I think part of that was wanting to understand the investment climate here, wanting to meet with some of these family offices and educate them. But I think the other part was just recognizing, again, some of these opportunities around energy and trucking and data centers you just don't see in other areas. So I think just the connections that were made there and the conversations that were had were pretty unique to the area, and there was just an energy that went with that. I had a great producing partner with Casey Digital Drive, and they really helped to make sure that everything went off perfectly. So on a superficial level, like we had a gorgeous event over at I think Magnolia Urban Event Space. We had wonderful, not really breakout sessions because everybody was kind of together all the time.
Yeah, and for me, and
I was going to say, what's your impression? How did you feel about it?
What I loved about it, and I know you got a certification in blockchain, I believe, from Oxford. So I don't have that type of. I would call myself a neophyte in the space, but some of the things I got out of it is it's still in the early days, this digital asset world, but a lot of advice was start using it. I asked every guest, whether it was Esther George, the former president of the Federal Reserve Bank of Kansas City, to John Squire from Blockchain Ventures, to Anthony Bassola, the president of Coinbase Asset Management, Gary Cardone, very prominent player in the space. Like, what does the average person not know, like, about this space? And what they said was there's a fundamental misunderstanding of money as it exists today in the current structure. So that and it just, you have to start using it. And Gary Cardone said, I believe it's not a currency to me. It's an industry. Like, I can own a franchise for $100,000, the franchise of Bitcoin, and versus spending $3 million on a Popeye franchise. You got to love that he brought Popeyes into the conversation. But there's no human, he didn't say interaction, but there's no human error. Like, I don't have to get people to show up for work. I don't have to clean the store. I don't have to worry about quality assurance. I mean, it's basically almost a seamless way, a passive income stream. I don't think he used those words. Those are mine, but. And Anthony Bassola.
That's what everyone's looking for, though, right?
Yeah.
Is that?
Everybody's wanting that. Anthony Bassola said, I have never heard this term describing this Web3 space, but Web3 is the internet of money. Web2 was kind of the mobile version and making e-commerce better and faster and all that. But you still had these back-end infrastructure systems, exchanging money in old ways. And this is the removing the middleman and other things. So for me, it was fascinating. I was just honored to be a part of it in terms of, interviewing these great people and, Danny Baer of Meanwhile doing, life insurance, whole life policies using Bitcoin. It was just mesmerizing. And then so honored to, interview Esther George. She's fantastic. And, I loved her take on, that, we're driven on financial innovation in this country. And she comes from the, kind of the traditional school of money in the U.S. I mean, being a federal, Reserve Bank president. But yeah, just for me, it was just great.
I guess one thing that stood out to you, just of the conversations that you were having in the new Hive podcast studio, which is looking great, was just that for some reason it didn't occur to me. It's just that Bitcoin, and there's kind of Bitcoin, and then there's everything else. And Bitcoin is a great starting place for a lot of people, but it's a $2 trillion industry. Gary Cardone mentioned that, and then Danny Baer also mentioned that too. And $2 trillion industries, don't fail. Like this, just like you said, this is an industry now, $2 trillion. And I also agree with the concept, like this came true for me. Like I had gotten the Oxford certificate. So, 7-week program really just to understand it better. And I'd been working in it again, from like blockchain being integrated into an energy system or a trucking system, but I hadn't really made any bets myself and was trying to follow it. But I think, Anthony's point of just starting, that's what I did. I got on Coinbase, right? That's kind of a central exchange, which, goes a little bit, if you're really a maxi in terms of, just Web3. It's all very decentralized, but I think Coinbase is a great place to start because somebody else is, tracking the wallet. You don't have to, have custody of the keys and lose them. But I just started making bets on a lot of different blockchains, including Bitcoin, signing up for the little alerts and just watching how they did. And then from that gave me the confidence then to make bigger bets and, go into the market and do some different things. And I have to say, like, it's not like I've taken any huge swings, but the bets I have placed, just kind of looking at my overall portfolio, like they have done. I mean, this has been a wonderful summer, certainly for digital assets and stable coins and things like that. But that part of my portfolio has probably outperformed all the others, and basically just Bitcoin and Ethereum is what I've been looking at. So.
Well, and Anthony Bassili, sorry, he wrote that white paper, Get Off Zero, meaning don't have zero allocation of your portfolio in Bitcoin. Just get 1% or 2%, whatever. But just get off zero. So just fascinating. And I just where's the future of this event? Because again, I thought the intellectual horsepower in the room, was just phenomenal. And the thought leaders that you brought together here in Kansas City. I mean, is this going to be an annual event?
I think it will be. In fact, later this week, I'm sitting down with Casey Digital Drive. Again, they were phenomenal producing partners, and just, along with some of our key sponsors. So Polsonelli, Mariner, Collaborative Capital, and then Stellar Forge. So some real storied names here in Kansas City. I feel like this was the beginning of a story that we want to continue to tell and continue to host this event here. So, that was kind of my hope going into it, was to have, Kansas City have a place on the global stage when it comes to digital assets. And there's somebody her name's Pamela Norton, and she was here last year for kind of an earlier version of this. We had a meeting of the KC Futures DAO, where I'm also a founding member, and she had talked about how at one time, Kansas City was very central. They were a big part of the an exchange when you kind of look at wheat and beef and other things, and then our influence there diminished over time. And so, clearly this is digital financial rails, and it's a little bit different, but because Kansas City also happens to be, again, in the middle of some of these very strategic, national infrastructure, energy security opportunities, and there is a direct intersection with digital assets, I feel like it's very strategic to have it here. And then when you're looking at investor fluency, and the reason that we're targeting family offices and investors in particular, certainly one just came through my role at Tiger 21, but I also think the more that investors that can back some of these projects understand things, the more capital they're going to put to work in a specific way, behind these highly strategic projects that are incorporating blockchain and digital assets. So continuing to have the event here, I think is it's not just a great thing for the region, but I also think it's a great thing for big Wall Street players, but also global players that want to understand the future of digital assets and blockchain through a slightly different lens. So yes, we're planning for year 2.
Any parting thoughts in terms of the event, or any things that the speakers, in terms of their insights?
I mean, one great highlight for me was interviewing Esther George. So she was, 40-year in the KC Fed, 20 years as the KC Fed president. Highly impressive. Now I think consulting both on Wall Street and in DC. And she had, an interesting comment that I kind of think played into just sort of fear and greed and everything kind of coming together around the space. And, one was certainly there's regulation now. There's been one with the Genius Act. We have the Clarity Act coming up. And so once there's regulation, there's a market. And so then people, they want to understand that there's an opportunity there, right? They get excited because they understand what is and isn't possible, what is a security, what is not a security, and how they might invest. So that part of it is exciting.
Yeah, absolutely. Heidi, thanks so much. You're the first 3-time guest on the Corporate Couch, so congratulations. I love it. So you broke the tie. There was a 2-timer club that you were a member of, but I was honored. Joe and Deshaun and I were honored to be part of the event and use the Hive co-working podcast studio for the first time ever. So thank you very much.
Well, I hope you'll be back to the Hive, and it was such an honor to have you here, Jeff. I mean, you've got a wonderful style. I'm such a fan of the Corporate Couch. So thank you so much for coming in and being part of HDEX.
Thank you so much for listening to this episode of The Corporate Couch. If you enjoy the podcast, I would love for you to take 2 minutes out of your day to rate us 5 stars and write a review. Please join me next week to learn from another great leader sharing their professional journey and insights.